Hey, what's going on, guys? It's Mike back with another video, and in this video, this forex trader Raul makes $40,000.
Tell them to bring me my money.
$40,000 trading gold. Now, in a lot of my videos in the past, I've basically talked about gold, and I know in a lot of my videos I tell you guys, once you understand structure to a certain extent and you're a lot more comfortable with it, you can trade some of the most volatile pairs within the foreign exchange market. So this is something that you really want to consider once you really understand what's going on. But we're basically going to see how he actually did this, man. So it's going to be exciting. So before we get into the good stuff, you guys already know what to do. Make sure you please comment, like, and subscribe. Turn on that notification bell to become a part of my notification again and know when I post new videos. You want to have that alert on 24/7. Sometimes I post daily, sometimes I post once a week, twice a week, but I'm always posting videos. So just having that bell on and hitting that subscriber button is going to help you really stay in tune with my channel. And another thing, I'm also leaving you guys a lot of helpful information in the description box. Okay, now they are affiliate links, so if you do use any of them, they will help my channel, but you do not have to. You can go out there and find some more information yourself. It's all good. I'm just trying to be a help to you guys. But other than that, let's get right into the video.
When it came to me and my decision making as to why I actually wanted to look to take this short position on gold, one thing that I like to base my trading methodology off of is all based off of supply demand, support and resistance. So gold over the last few weeks has been trending very bearish. You could see that very clear on this 4-hour time frame where price pretty much forms a lower high, then a lower low, then a lower high, then a lower low, then a lower high, and as you guys can see.
Now, this is perfect example right here. You see what chart he's starting out off. Now, this is a perfect example right here. This is the part that I've always shown you guys. You see automatically he starts on the higher time frame. Now, the 4-hour. Now, he's not on the daily and weekly just yet, but he is starting out on the 4-hour, which is the closest in confluence with the daily and the weekly time frame. So this is powerful in itself, and you see how he's circling off the lower highs and the lower lows that price is continuously creating. So these are very significant points. So let's see how he actually takes advantage of these areas. Okay,
this is very clear indication of price trending bearish, and price is forming lower lows and lower highs. And again, this is going to be considered a lower high because this high is lower than the previous high. And then it is a confirmed lower high because this high broke under the previous lower low, making this the valid lower high point. So this is all just basic trending fundamentals when it comes down to reading price action, right? So when it came down to me making this decision on looking at what position I wanted to take on gold, gold was actually trading around this area, around 1800. It pretty much had broken down into this area, and before I even looked at taking a position, I have to identify overall market direction. Looking at the weekly time frame, we had a lot of bearish momentum, just to kind of make things short, simple, sweet, to the point. Daily time frame, price started to continue to make new lows and break under my areas of support. So as you guys can see, 1865 is a major area of resistance that I have marked off here as support, along with 1833 is a major area of resistance where I had marked off where there is previous support. So these are all areas that prices continue to break under. And for those of you guys looking to mark off your support resistance with a little bit more accuracy, or your supply demand levels with a little bit more accuracy, you want to look for the biggest reactions out of those levels. So notice how once price hit this area, it traveled from 1833 literally all the way down into 1600. So I would say it's a pretty big reaction, along with, look how many times price failed to break above that area. Then we look at 1865. Look at what happened when price rejected 1865, went all the way back down to support at 1764. So these are all tall tale signs, if that's what you want to call it, that these are more important areas of support and resistance, because you can have your minor areas such as this one right here, or this one right here, right? But these are your more major areas, and you can mark off.
see, just like what he said right there, just like what he said when he talked about this area and this area, he has his line right here and right there. He's basing that off of the higher time frames. He's on the daily time frame right now. This is what I always talk about with you guys, about really understanding those resistance and support levels based on the higher time frames, because that is where it's going to be most important. I know a lot of you guys always, are concerned about like what is the best time frame. Well, the higher time frames hold more importance because one candle based on the daily time frame is a whole day. So if the daily candle is bearish, then on the lower time frames you'll see price making a series of lower highs and lower lows. If the daily candle is bullish, then if you go down on the lower time frames, you'll see that price is making a lot of higher highs and higher lows. Okay, but being able to get in based upon these areas like he has marked, you can see as every time price hit here, there was a major move, and this one happened in general, and it spiked from here all the way to that daily support level that he has marked. Okay, now he hasn't even put his trades on the screen just yet, but he's about to get into it.
Off your major areas of support and resistance based off the daily time frame. So why we take trades at support and resistance levels is because these are areas of liquidity. These are areas where you're going to have buying and selling pressure, and these are areas where you're going to find the highest probability setups. So when it came to me making this decision, I saw price break under support multiple times along with price turning bearish. Again, we're identifying direction. We're identifying that price is making lower lows along with breaking support levels. So when price actually broke under and made new lows at about 1786, at that point in time, I only want to take a trade ever on a support or resistance level, right? Look how many times price rejected this 1833 level. So what I waited for was for price to give me a pullback into that 1833 level to then look to go short. Now, some people may be asking why 1833? Because now that price has broken under 1833, notice that there was previous support, which had now formed as resistance after price kind of broke under this area, right? There is a higher probability that price is going to pull back to test that area, and buyers are going to try pushing price higher from that point, right? You want to think about everything as a tug of war. Overall, though, again, we only want to be buying and selling at levels of support and levels of resistance. So where's my nearest level of support? Where's my nearest level of major resistance? It's 1833. So I'm not interested in taking any trade unless price is going to pull back into 1833, give me that rejection to look to go short. Why? Very simple, because I only want to focus on the highest quality trades possible, the highest probability trades possible, right? If you were looking to buy a car, right, would you go into any kind of car market and put your hard-earned money behind the car that you know is most likely going to break down on you? Probably not. And that's the same exact kind of decision making that I follow here. Why would I take a trade and put my hard-earned money behind a trade that may not play out in my favor? So we want to focus on higher quality setups along with higher probability setups, meaning that the trade has a high probability to play out in our favor. So now, when price actually did pull back to 1833, you can see that there is an area of previous market structure here, which is this is our previous 4-hour lower low point, which again, at one point in time, there's buying pressure here. That buying pressure was met with selling pressure, right? Now, once price actually pulled back, this was my entry method now, just so you guys can kind of make that decision, right? So right once price actually pulled back into 1833, I saw that price actually rejected and closed under. Not a major rejection, but enough for me to want to take the position because price did close under. So I ended up taking the position very aggressively after that 4-hour candlestick actually closed. And it's not always trades like this.
That's very important what he just said. That's very, very important. So this is one of the things that I talk about a lot too. He based his entry after that 4-hour candle close. Now, some people may have tried to get in a lot earlier because this wick that we're seeing on the 4-hour right now, this wick, if you would have went down to the lower time frames, it would have probably been like a double or triple top based on the 15-minute and probably like a double top based on the 30-minute. It really depends, but if you go all the way down to the 5-minute, you would have probably seen a lot more information than just this one little wick. But because the 4-hour is so much in confluence with the higher time frames, it's a better probability and it gives you a better confirmation for price to actually go in your direction. This is something that I see tons and tons of times, because there's been instances where I didn't wait on the 4-hour candle close and I tried to get in early based on the lower time frames, and it wasn't done buying. That's like trying to sell when buyers are heavy in the market still. So being able to wait on that 4-hour candle close is really, really going to be helpful for you guys. I suggest maybe you guys set alarms throughout your days. Have alarm for every single 4-hour candle that closes. Have an alarm for it, depending on what what you're trading. Maybe you're trading a currency, a metal, an index, or a crypto. Whatever the case may be, you want to consider that, so you can have that time for it, so you can know when things are happening. Or you can also set alarms on your trading view as well too. I'm going to make a whole nother video on that, but let's get right into this one.
Close. And it's not always trades like this where I get a crazy entry with zero drawdown. Now, before I entered the trade, I already knew where I wanted to get out if I was right, and I already knew where I wanted to get out if I was wrong. The decision making behind that was my stop loss is going to be up here roughly for around 90 pips, which is quite a lot, right? I want to say it was a little bit less. It was like 80 some pips because I was looking to gain 4 times my risk out of this trade, right? If price were to break above this resistance area and hit my stop loss, I'm most likely wrong anyways, and I want to get out of the trade. You want to place your stop loss in an area that's going to make the trade invalid. And if price were to come all the way up to 1840, then most likely my trade was invalid, and I'm going to lose money I'm going to lose more money if I continue to hold my position. Remember, one thing about trading is that the risk and how much you're going to lose is predetermined, but the reward is always going to be unpredictable. And especially in this example, this is why I want to trade or break down this trade for you guys, because this trade just didn't play out how I expected it to play out, but at the end of the day, still in the green, right? So this entire area is that previous area of support and resistance I was looking to take that sell from. So right once price gave me that rejection, that's when I ended up taking the short position. Very simple entry method, a very aggressive entry method. I knew that price on the next candlestick could have possibly gone up for another retest, but that was the risk I was willing to take because, again, I saw this was a very high probability setup. Now, my take profit for this area was actually going to be 1800. Notice how at one point in time price rejected 1800. Price flew up from 1800 to 1850 and then dropped all the way down to 1786. But notice how price closed right at 1800. So this is where I decided to actually put my target, because there's a reason price closed at 1800, although I went all the way down to 1786. So that is where my target was. I identified that I had a potential to make 4 times on whatever my stop loss size is, whatever I'm risking, and that's when I actually made a decision to make the entry right when this candlestick actually closed, pretty much a little bit before New York session, a few hours before. Now, I knew that I was going to see real volume into New York session, but luckily price was pushed in my favor pretty much right away. Now, when it came to this hour time frame and why I decided to actually take that position or trade my stop loss in the hours, pretty much I saw price come all the way down to here. Now, I was already up almost 3 times my risk, and I could have closed with a $70,000 profit, but I decided to trail my stop loss because what could have been a $70,000 profit could have potentially turned into a $100,000 profit. So that was a risk I was willing to take. What I also noticed on why I trailed my stop loss to where I did, which I'll go over in a second, was that there is a level of previous resistance here. Notice how price pumped up or pumped down, came back up, retested, rejected, came back up, retested, rejected, continued to go down. Now that price had broken under that area yet again, and I saw price form kind of this little lower high point under the 50 SMA, price continued to go down, and at that point I decided, okay, well, if price breaks above this area, then it has a probability of continuing to go up, possibly back to my entry, and I'm not willing to give all my profits back to the market, which you have to be able to do that as well. You need to know when to get out and when it's smart for you to show your stop losses versus for you to continue to hold your position, right? That's all part of the learning curve when it comes down to trading. So,
see, that's the biggest part of it. Just that really cans it all. Like knowing, just like what he said, knowing when to get out or when to hold the trade. Just basing your analysis off of how structure's moving at the time and where the volume of the market is. That's going to be one of your biggest challenges. Once you get the entries and stuff down, now you have to really be able to manage the trade. Otherwise, a lot of times you'll be missing out on profit. And I've noticed that's happened to me in the past too sometimes, where I'll be up heavy in profit, you know, I'm looking at it, and then she closes heavily rejected based on the H4 or the 30-minute or 15, whatever time frame I'm basing my targets on or whatever. And, you know, I don't pull out, you know, I stay in the trade, and then she comes all the way back to my entry, and then past my entry all the way up to my stop loss. So you definitely want to keep that in mind. Sometimes you may get a good entry, have your stop loss at a valid location, and then she goes heavy in the profit, and then maybe you'll be able to pull out right there, and you doing that, then she pulls back to where your entry was, but you already secured the profit, and then she gives you another entry opportunity, and then you get in at that same area. It may be a little bit further back from where your entry was originally, but it's still valid based on you know, that previous high or that previous low not being broken, to where you can follow the trend in the same direction. So a lot of this stuff you guys want to keep in mind. It was just really cool to see, you know, how he, you know, actually broke down the trade, and, you know, how he's making this kind of money. So, like, I know a lot of you guys, some of you guys may be trading with $100 accounts. I understand your pain, honestly. If you are, you really want to consider trying to get a funding account. I highly suggest it, because you know, his sort of stop losses that he just drew on here, those are big stop losses. But those kind of stop losses on a smaller account, you're risking, you know, you're risking about $5 or whatever. If you're using a big lot, you know, a decent lot like a 0.10 or a 0.08, I'm just being realistic for some of the beginners that may be watching. Your reward may not be that big compared to his. You know what I'm saying? He just said 80 pips, and his gain was like 200 something pips, I believe, somewhere around those lines. I don't even see the risk to reward position, but his profit just from that one little move, when he talked about he closed it, was still a decent sized profit. Your profit would have probably been like $5 or something you would pick up off the ground, or you could pick up off the ground. So you want to kind of consider that when you're picking out what kind of account size you're starting with. I'm a firm believer in anything happening though. If you got a $100 account, I've seen $100 accounts build to 10,000, 20,000, or $10 accounts build to 500 to 20,000, or 10,000 or 1,000, or whatever the case may be. Anything is possible. You just have to have the right strategy and the right mindset to be able to build that account, man. I'm telling you, there's some crazy traders in this community, but what separates one from the other is just the mindset. That's really all it is, because anybody can talk about analytics and strategy all day, including myself, but it's really going to come down to, you know, what you're dealing with inside your heart and in your mind, because anything that you do in your regular life, and you know, and how you react to your circumstances, it's going to show in the markets as well too. So keep that in mind when you guys are trading. So hopefully you guys enjoyed this video, man. I definitely did. It's powerful to see you know, other traders out here, because he started somewhere too, you know what I'm saying? It's powerful to see other traders making it, so I definitely enjoy that. But if you did receive any sort of value from this video, man, be sure to hit that like button, hit that subscriber button, and if you want to go even further and support my channel, hit that super thanks button. And other than that, guys, thank you so much, and I will see you in the next one. Peace.